In this video, we show you a monthly review done by a firm trader to improve their trading performance. A trader from our desk will display and summarize his monthly review with feedback from a trading partner, in this case me. You're going to get a chance to see how this trader dissects and very clearly sees what he does well and what he doesn't. What trades he should take more of and with more size, and what trades he should eliminate. If you want to learn how to use a monthly review like a pro trader to improve your performance, then this video can help your trading. Hi, I'm Mike Bellafiore, Managing Partner of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the trading videos that we're producing for you in the trading community. Well, in this video, you're going to learn how to do a monthly trade review to improve your trading performance. You're also going to learn the importance of tagging all of your trades, how to spot your best and worst trades, techniques to combat overtrading, rules on profit taking to improve your results, what you can measure in your trading results to boost your PnL. So for those of you who want to learn how to improve your trading with an effective monthly review, an essential monthly review, we hope this video helps. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. So take some time and go attend our workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So this is my review for January, and I'm kind of going to talk about first the things that I found most concerning or alarming since I went live. And then from there, I'm going to kind of talk about my top trades and what seems to be working, what's not working, and then kind of wrap it up by going over my winning days and losing days in January and kind of the overall PnL curve. So first, I kind of want to talk about my performance by time of day. So this is my overall PnL broken down into 15-minute intervals. And this is since going live. So I went live December 10th, and this is till the end of January. So you can see that I have the most losses from 9:30 to 9:45 by a pretty significant amount. And something to take note of is for the month of January, I was positive trading the open, and something I realized was that I had a plan for the open and I knew what I wanted to see as far as patterns, but it lacked specific detail. So like if I'm trading the open now, I know exactly what levels I want to see hold, what prices I want to get in at, what my reasons to exit are, and this makes it much easier to trade during the price discovery phase because it gives you a lot less to worry about. Also, something my mentor has stressed to me was that the importance of profit taking on the open and how these trades should be looked at as very quick, active move-to-move trades. And, I kind of implemented both of those things in January, which led me to pretty much be break even on the open. And so I'll continue doing that moving further. The second thing about this is when I'm putting on trades between 11 to 1, which some traders call the zombie hours, nothing's really moving. My winning trades are very minimal. It doesn't seem worth it to put any trades on. So you kind of see these extended red bars right here, and these blue ones are the profitable times of the day. in order to take some steps in the right direction regarding trading after 11, Dr. S and I, we kind of discussed implementing some rules. And one rule that I came up with to kind of take a step in the right direction is that if I'm not profitable by 11, I should take a time out till 1 o'clock. And I started doing this last week, and it worked well, and I'm going to continue to do that moving forward.
So I like that. And what happens with most traders is they say, I want to trade better during the middle of the day. Yeah. I want to be more disciplined in the middle of the day, but they actually don't come up with rules for how they're actually going to go about doing that. And so what you've done here, which is really great based on your stats, is you've come up with a definitive step and rule that you're going to take that is in effect going to make things better. So that's great. And then the other thing that I think comes up in these stats is that you do have a decision about, hey, I'm not really doing well on the open, but I've talked to my mentor and now I can see some things that I can do better. I'm going to do those things better, and thus my results are going to improve, and they have thus improved. So that's always a decision you have when you're looking at trading stats, which is, should I just eliminate it, or can I make some changes to do it a little bit better? So what else we have in your monthly review that you're finding from your trading stats?
Okay, so the next thing is performance by intraday duration. So this is my PnL this is my PnL based on how long I'm holding my trades for. It's kind of alarming that I'm not profitable on any trades that are held under 1 minute all the way up until 20 minutes. I do think there's a small issue with this samples, being that I spent a lot of time scalping SPY when the VIX was over 20, which proved to be unprofitable for me. With that said, I do think this chart will look different for the month of February. I do still have a concern here though. I believe that I'm not taking profits quick enough in intraday setups. So for instance, on a change in character play where a stock has held above VWAP for the day and is now consolidating below, I'll get short, the trade has a momentum push lower, and I'm expecting more out of it. I don't take profits, or I do ring the register, but I'm not selling or covering enough shares to make a difference in my PnL. And I could kind of talk about that a little more with this next chart here, which is performance by in-trade price range, which basically talks about my profitability based on per share PnL. It's called max variable excursion. It's another word for it. So I'm negative on all trades where the excursion is not over $1. And I kind of need to be more cognizant of what kind of trade I'm in. So if I'm taking a trade kind of like just based on an intraday change, I need to be taking profits quicker. I'm expecting too much from these types of setups and patterns, and I'm not treating them correctly. So unless it's a backside trade, a longer term technical breakout, or breaking news play, or something with a very significant, or something, a stock that has very significant change in fundamentals, I need to start taking profits as soon as I see momentum slow on the tape. So I'm kind of thinking of putting a rule in place where if I'm trading anything other than those setups, I need to sell or cover half of the position when momentum slows down, and then adjust my stop to break even if I want to hold the rest. So,
are you going to put that rule in place, or you're just thinking about putting that rule in place?
No, the rule is actually in place.
Okay, good.
I started doing that today and a little bit last week.
Okay, good. And then that's something either in Evernote or your trading journal or your daily report card that you want to track to see that you're actually implementing that rule.
Yeah, and I kind of I printed out a little note and I stuck it on my monitor, like right under my PnL box to like kind of remind me. So now I want to talk about my performance by symbol. And I found this to be the most helpful thing in my monthly review. So, my top 10 trades all have something in common. And I could kind of go over each one and briefly give an explanation on what the trade had to do with and what the catalyst was, etc. So my top symbol is PCG. This is a breaking news play. So they were no longer being blamed for the 2017 fires. And the stock was beaten down heavily based on, the Chapter 11 news. So when this news came out, the stock was actually halted. And when it unhalted, I was able to, quickly define my risk, put on the right amount of shares, and get long. And, this was a big trade for me, my biggest trade yet. So the second and third symbol are XPO and DOX. These were hit pieces by Spruce Point Capital. These are my top setups. I have a feel for these setups, and they seem to be the same three patterns. And I know these are my best trades, so I usually allocate 25% of my daily risk to them. So next is QCOM, which was a hit piece by Carousel Capital. Following those trades were Stitch Fix and Roku. So these were changing fundamentals plays. More specifically, they both had to deal with an increase or decrease in subscribers. So these are both growth companies, and when they report earnings, kind of the biggest impact on share price is whether or not they're meeting expectations regarding user growth. And if they are like beating the expectations or missing on that number, they seem to have very big moves. Next is VALE, V-A-L-E's symbol. This was also a breaking news play. One of their mines collapsed, leaving hundreds missing and people dead. Following that's eBay, which was a breaking news play. So a stakeholder sent a letter to the board noting an opportunity that could value eBay at 55 to 63 a share, which was well over what the stock was trading at that day. And the stock trended off that news. Twitter was a hit piece by Citron, and Uvixi, which I traded during the Fed meeting when the Fed had increased their dovish tone, and AMD and Now, which were significant longer-term technical plays. So, you could kind of see that there's a common theme with all my top symbols.
I know that you and Dr. Steenbarger, myself, we all talked about that common theme. And Dr. Steenbarger talked about, I think it's very easy to sort of sit there and not be able to weave together a common theme when you think about where your profits come from. I think a lot of traders would just say, oh, I paid a bunch of money in some of these symbols.
Yeah.
And what you've done really well is you've figured out what symbols you've done really well in, and then you've figured out what the actual trades were. And the trades on their face do seem as if they could be put into different buckets, right?
Absolutely.
You have some breaking news trades, you have the Fed announcement, you have some technical setups, and Dr. Steenbarger very smartly pointed out, and I think this really gets to the heart of your future potential and what the importance also of taking a look at these trading statistics is that you're having a lot of success in a big bucket, which is called event-driven plays. So when there's an event, you're having a lot of success. So those longer-term technical plays, sometimes people would get a little bit confused about, well, why am I suggesting that's an event? There's no news behind it. Well, the event is that there's a really big, longer-term technical setup that you're seeing on your daily charts. That's an event. And you're seeing an event when there's a hit piece. And you're seeing an event when the Fed gets more dovish. And you're seeing an event in VALE with a breaking news play. And so very clearly from the trading results, so you're flat for the month, and you've got a lot of trades that are pretty negative, and you got a lot of trades that are really good, but what your stats are sort of showing you is that you're really good with event-driven plays, and you need to do more of them. And not only do you need to do more of them, but you want to put on more risk with them. And then you want to be thinking about, hey, I've done well on these types of trades. Well, how can I find other trades like this? How can I expand what I'm doing to find other event-driven plays so I can build out my playbook and build out my career on that? And you want to think a little bit harder about how you do that. You want to be, so for instance, we talked about a really good way to find event-driven plays is to game plan the next really good opportunity that can come around. So right now we're sort of in the midst of a trade war between the US and China. You should be game planning the talks going well, the talks going poorly. What are you going to do when news hits on that front? What are you going to buy? What are you going to sell? If it's good, what are you going to do? If it's bad, what are you going to do? That's the type of stuff you really need to be doing, because that's your strength so far. Now it's interesting, in your trade stats, there's some red here. Where do you think that's coming from?
That's coming from market trades.
Okay.
And I could go on to that next. So I just want to talk about my worst performing tags. So, at the end of the day, we tag all the trades we've taken that day in TraderView, and we tag it by the setup or the catalyst. And so it's no surprise that my worst performing tag was scalping and market trades. So when the VIX was above 20 and the market was moving, I kind of convinced myself that we're going to be in this period of volatility for a long time, and this is something I should really focus on and learn how to do. So, after spending about 2 weeks focusing on scalping the market, I realized that this was not for me. And the stats prove that. And those are my 2 worst performing tags.
All right, so for those watching at home, so tagging your trades. So you are taking all of your trades and you are uploading them into TraderView.
Correct.
And then you're putting these tags on all of your trades with a very specific name.
Yes.
So if you think a trade is a scalp, you give that a tag. If you think a trade is a market trade, you give that a tag. If you think a trade is a breaking news play, you give it a tag. If you think it's a changing fundamentals trade, you give it a tag. And when you're doing this, then it spits out a bunch of data on the different types of setups and your wins and losses on that. Did I state that accurately?
Perfect.
Okay, so that's a good best practice for everybody to be doing. And so what came out is scalping, not so much. Market trades, not so much. And so we now have some really good data and some conclusions that we can start to form about your trading, which is you're really good at event trading. You're really not so good at market plays and scalping. And so it's a little bit early in your career to be completely giving up on scalping or to announce that you're going to be the next great event-driven trader on the street. But it does give you some clues that you should be spending more time on event plays and way, way, way less time on scalping, if at all. And way, way, way less time on market trades, if at all, and maybe you only take them when VIX is above 20. Maybe if VIX is 15 or 17, that's not even enough for you to take those trades. So good. So we've learned that. Are you surprised that event trades are good for you and scalps are bad for you?
Well,
When you think about, we say this a lot, right? You think about, you want to match your cognitive and personality strengths to the setups that we're teaching you guys and ask you to gravitate towards them. So we teach a lot of different types of setups, and you get exposed to the senior guys who come in here who teach a lot of different setups, and I know you were an intern, and so you've been here longer than some other people, and so you've seen different trades with edge that the senior guys roll out to the traders and the developing traders here. Are you surprised, given your personality and cognitive strengths, that your results in scalping are not so good and your event-driven trading is good?
I'm not surprised. So, with these breaking news and anytime that there's a big catalyst, I think one of my cognitive strengths is being able to measure how significant something is, then kind of like break it down in my head in small pieces and say like, well, this is significant for this reason because, this could happen. I feel like I'm just able to process how important a catalyst is and then make the decision to kind of like put the trade on, how much size I need, and like I'm able to gauge how important the catalyst is, I think.
Okay, great. So what else from your review strikes you as significant?
Well, what I found very surprising is that second day plays and breaking news second day plays were runners up as my worst tag. So I feel like if I'm making a significant amount on a stock, the second day I'll look for that kind of move again and I'll push too hard and I'll expect the same outcome as day one. So, moving forward, I think I need to decrease my sizing on the second day, and I kind of also need to understand better that the stock just had a huge move most likely, and it may need to oscillate, rest, settle down before it decides what it wants to do. And I just need to be more careful when I'm trading it the second day.
Can you run us through the very first page of your monthly review and walk us through your stats and what those measurements mean to you? So if we take a look at your front page where we see statistics, 10 winning days versus losing days, can you walk us through these measurements?
Sure. For the month of January, I had 10 winning days and 11 losing days. My total gain and average daily gain or loss on winning days is slightly more than losing days, which is a step in the right direction. However, there are some staggering differences between my winning days and losing days. And I think that one thing that would help me tremendously is being able to recognize losing days faster. And kind of what I'm seeing from these stats are that on my winning days, my average daily volume is 3,200 shares. And on my losing days, my average daily volume is 12,000 shares. So I'm trading 4 times as much when I'm having a bad day. So, kind of what I think about when I see this is I kind of think back to a day where it was difficult for me, and I kind of think about what sticks out to me about that day. So this goes back to trading between 11 and 1 o'clock. So if I start the day and I'm down, like I'll strive to bring my PnL back to break even, and that'll cause me to overtrade.
Yeah, and that's very common. And so one of the things that very successful experienced traders do is they break their day up into different sessions. So they treat the open as a trading day, a trading session. They treat trading day as a separate trading session, and they treat the close as another separate trading session. And they schedule breaks at the end of each one. So after the open, there's a physical, mental, intellectual break where they physically get up off the desk for a period of time, and they go fill their water bottle, they go for a walk, they go grab a snack. They get up off the desk, and there is the demarcation between open and the start of the midday, the second trading session. And then they schedule another break at the end of the middle of the day trading session. They get up and they go do something, and they reset, they recharge, and then they come back for the close. And that helps traders, that has helped a lot of traders see the days as separate and helps them to restart. So what happens on the open doesn't have relevance to the middle of the day, and the middle of the day doesn't have relevance to the close. And you know this very well, there are strategies that work best in each one of these different time frames. So on the open, you're going to be scalping more, you're going to be momentum trading more because the volatility is higher. During the middle of the day, you're going to be fading more because that strategy works a little bit better. During the close, you're going to be trading the trends generally, I'm making generalizations,
Sure.
than you would at other times of the day because that works most effectively. But those are resets, and literally putting them on your calendar, having a pop-up at 11 o'clock or 10:50, go take a water break, go for a walk, go have a protein bar, whatever you do.
Yeah, and that's something that I started doing. So like around 10:30, I'll go take a walk, and I'll kind of just like speak to myself, and I'll say, am I seeing things correctly? What is the overall market doing? How are the trades I took today? Am I fighting for price? Kind of just have a conversation with myself.
Great. Those are exactly the type of solutions that you want to implement. All right, so what else are we seeing?
All right, next up, on winning days, my average hold time on winning trades is 2 hours, and my average hold time on losing trades is 40 minutes. But on losing days, my average hold time on winning trades is 40 minutes, and my average hold time on losing trades is 32 minutes. So I think that's a big disconnect between my winning days and losing days. And, you know, kind of looking at the stats that we looked at before, it seems that I prefer trades to hold. And on my losing days, it seems like I just can't find any of those types of trades. And that's kind of what that says to me. So next I'm going to look at my average winning trade on winning days, which is $76, and my average losing trade is 17. So on my winning days, I'm cutting my losers and I'm holding my winners. However, on losing days, my average winning trade is $34 and my average losing trade is $35. So, you know, it's kind of clear to see that on my losing days, I just can't seem to get the ball rolling. And I think that it's difficult to recognize this in real time. You know, you're thinking an opportunity might come, or you're saying to yourself, oh, this trade could be the one that works. This one could be the one that trends. And I think that a good way to combat this would be to maybe put my trades in trader view at around 11:30 and kind of see if they look similar to a losing day or winning day. So if they're similar to a winning day, I should maybe continue doing what I'm doing or even push a little harder. But if they're looking similar to a losing day, I should push for a more defensive trading strategy, increase my patience and selectivity, and cut my losers as soon as they start going against me. All right, so just going to go over my overall PnL curve for January. So you could kind of see at the beginning of the month, I got myself into a rut with scalping. When the VIX was above 20, I kept trying to scalp the SPY all day long. And you can notice that my trading volume was a lot more. My win rate was very minimal. And my losing days, there's just 7 of them in a row. And the day that I was profitable, no more than $100. So, after I kind of decided that scalping wasn't for me, and I was focusing on what I knew that I was good at, you could say that there was a dramatic change, and you could kind of see that my PnL curve kind of ended the month flat after I decided to stop scalping the market. Well, now I'm going to talk about my goals moving forward. So for the month of January, I focused on process goals and making sure I complete them each day. And I created a mindset spreadsheet in order to track my winning days. And in doing that, I'm trying to figure out when I'm performing my best and what's similar in each of these winning days.
That's great. So you want to be thinking about measuring what you trade best, what those setups are, and then you want to be measuring and reviewing when you trade best.
Yeah, and I kind of added things in that spreadsheet, such as what time I went to sleep the night before. Did anything significant happen outside of work in the office that may have affected me in any type of way? And yeah, I think that's kind of important.
I think a lot of traders don't do that. So they spend a lot of time thinking about what their edge is in markets, but they don't spend a lot of time understanding that what they bring to each day can in of itself be an edge. What kind of sleep you get, how you eat, how you exercise, significant others. That stuff really starts to add up. How you feeling? We had a trader who we work with who went in the other day and was admittedly a little bit hungover. Very disciplined person, but just happened to have a guy's night out, happens, and underperformed. That's a lot of information, and so he can now think about, hey, maybe if I recognize that before the open, should I either scale down and risk, or maybe I should even sit it out?
So going into February, I want to extend these process goals into actual trading itself. And there's some things I'm doing on winning days that I want to create into habits. So these things include fighting for price and adding liquidity, taking pieces of my position off when a setup begins to work, ringing the register on extended moves, only trading the open if I have a very detailed plan, putting on risk in only my best setups, and trading small size in all the others. If a trade is going against me and comes back to break even, selling or covering a piece of the position, and adjusting my stops to break even when a trade begins to work. And kind of how I'm tracking this is I'm giving it a score, each of these items, so 1 to 4. So 1 being that I didn't do it at all, and 4 being, I did this for all of my trades.
Okay, good. And I would just add, as I said before, I'd like for you to spend some more time thinking about what other event type trades you can be in and game planning for that. All right, great. Great job. Good example. So this was your First month.
Yes.
First month live, and good example right here of the information you get out of a monthly review. Go ahead and click our subscribe button so you don't miss any of the trading videos that we're producing for you in the trading community. And please add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.